on, guys? It's K-Dub here with another episode of CryptoZombie. Welcome back to the channel. Hope you're having a great day today. I know today's video is coming out a little bit later than usual. I had a really crazy morning, lots of stuff going on. I wasn't going to make a video, but I needed to bring you this absolute revelation, right? So the crypto markets are obviously evolving. Things are changing. It's not the same game that it used to be. Having a look at what is happening with Bitcoin right now, Bitcoin is being held down by some massive, massive resistance right here. You can see the significance of this red line, which is the center of the blue zone territory. And you can see back here how it did act as support multiple times. And currently right now it is acting as resistance, and we do have more resistance on top of that. So is Bitcoin looking to have a massive breakout? Do we need to look at more consolidation? Well, I do want to revisit something that we spoke about a few days ago, and I want to discuss why I may have been wrong about Bitcoin, and not only just Bitcoin, but the crypto space as a whole, because there is something incredible that is happening right now, and it could be an absolute game changer for the entire space. I also want to discuss why we need to keep our eyes on Ethereum specifically, pay very close attention to what is happening right now. And also, as far as all the FUD coming out, we need to talk about the fact that we do have governments and regulators saying that they're not only becoming more friendly to crypto, they're actually starting to embrace cryptocurrency, and they are talking about possible regulation. We're going to discuss how that could actually affect the overall market space. So if that sounds good to you, you know what to do. If you're not subscribed, definitely consider it. And without further ado, let's dive directly into the charts. Oh, and also there is some big news from Visa as well. So that's something worth noting. So having a look at Bitcoin, we could see that we are clearly being held down, as I just said, by this very, very critical level. Now, as I showed you, this was acting as support back here around the distribution. Over here, we got above it slightly, just a little bit on September 7th and 8th, but really ultimately it was basically just a fake out. We did end up falling after that level, and currently we are being held down by this level again. Now, even though we are in the blue zone territory, we still have to deal with this resistance right here, which was our previous support, holding the entire trend up, and we also have this resistance coming down here from the top of the falling wedge, right? And Bitcoin is still down substantially from where it was before, even though, yes, we have had a bit of a recovery, but you can see from top to where we are right now, Bitcoin is still, in fact, down around 26.78% from the all-time high. Now, we have had quite a boring day in the stock market after yesterday's little bit of rally that we had right here, but the stock market ultimately, if it does close out close to this level, I would say is looking a lot healthier than we thought it was looking previously, right? And we do know that these two things are connected. Bitcoin stocks, all the traditional investors that are getting involved in Bitcoin are going to be treating it exactly the same way, right? So really what you need to do, like I said in yesterday's video, is really have Bitcoin get back into this megaphone pattern, this broadening, ascending megaphone. I kind of forget what it's called at this point, but essentially get above this level right here. And really, you're looking at this key level right here around 54,900, or like I had been saying, 55,000. So I'm still holding that until Bitcoin can get above and hold above the $55,000 level, it's difficult to really say that, you know, we're still going to continue the short-term uptrend. We may, in fact, fall to some of these lower levels. Now, we have talked about this pattern right here, essentially saying that we need to come back down to the start of it right here, which would be the 30K level. So will Bitcoin actually revisit the 30K level? Well, there was an interview with Mike Novogratz from Galaxy Digital, and he actually had his own opinion on where the Bitcoin price could settle. So I want to play that real quick, and then we'll have a look at it.
You've watched it a long time, and you're so rich, I don't know how close you really watch Bitcoin, but when it does go from when it went from 20,000 to like 2,000, you had to be like, oh my God. So if it goes, so you still see it and you got a lot of it. So it was what, 63, 64, 49 now. Do you think it's you think it goes under 40? Think it holds 40?
I don't. I really don't. I was just in the Mideast. There are new players lining up to participate in this crypto economy, from the Mideast to all over the U.S. to pension funds. And so there's a bid below the market. It's an institutional bid. It's slowly, they've done their work. They're waiting to participate. And I think people now have woken up that crypto is an asset class that Bitcoin is part of a crypto portfolio, that even if the Fed starts acting more hawkish, it's an amazingly complicated plane to land for Powell and Yellen, right? We've got a political environment that wants to spend more money. We have a monster budget deficit. And if you raise rates too fast, you're going to sink the economy, and no politician wants to do that. And so we lost a political Fed chairman, right? You know, all Fed chairmen are now political just based on the deficit. This idea of independent central banking is now a farce. And so Powell can act tough for a while because he just got reappointed. But if he starts doing things that, you know, put Biden's reelection at risk, you're going to hear something.
We just had, I know I'm not asking you to be a chartist, but that's not a double top we're seeing in Bitcoin. And if it is, and I don't know whether you got a monitor, but what would it indicate if that were a near-term double top? And even people that love Bitcoin and say, look, it's going to be here, it's an asset class, it's the greatest thing in the world, they've watched it. It was at 28,000 not too long ago, Mike, after it had been, it had been moved above 50. It went back down again now. What does that indicate? Would it surprise you if it went back below 40?
I think 42 should hold. That should be the bottom of this move. It would surprise me if it went below 40. We started the year at 29,000, let's remember. So we're still up a significant amount on the year, 70, 80%. Pretty darn good return for any asset. There are so many more people participating on it. It's hard for me to see it going below. Yeah, if it went below 30,000, below 40,000, that would be a significant change of sentiment. And I'd scratch my head.
So he's saying essentially that Bitcoin is not going to fall below $42,000. Now, I have been saying that I do believe that this giant wick that we had to the downside, where we fell to about the $42,400 level, was the bottom of this move, right? In fact, you could see back here, we also had a consolidation, but we did have a few fake outs below that level. So talking about Bitcoin, wicking down to $40,000 or something like that, that is still definitely in the cards. Now, there's two important areas that we do need to pay attention to. So we sort of have this new blue zone that we've developed right here, right? This is where we had a lot of support back here. We had some resistance right here. And currently, it is where we had the bounce after the recovery. Now, I'm not talking about the big wick. I'm talking about on that same day when we saw the wick get bought back up and we tried to push back down. It was that level right there that we saw the bounce, right? The same way that we saw the bounce here, the same way that we had consolidation and bounce here with a little bit of a bear trap down here, and the same way that we had the resistance right here. So this is a very important level for the structure of building Bitcoin. Now, if this level was to get lost, well, then obviously the even bigger level, arguably the most important level, is this green trend right here, because it was our resistance twice, more resistance, kind of acted as support, and perfectly acted as support. So this is the level right here that you don't really want Bitcoin to fall below. Bitcoin's last stand would be down here at around the $39,000 level, right? So that is essentially where I am looking at as well. I don't anticipate Bitcoin falling below that $40,000 level, or more specifically, $39,740, which is basically $40,000, because if we do lose that level, then yes, my friends, we are going to have a retest of the $30,000 level for Bitcoin. But like I said, I'm not going to jump to conclusions and say we're going to 30K, but what I am going to say is that it would not be impossible to see some sort of sideways consolidation, maybe a bit of rejection up here again around the 53, come way back down here. People think, oh my goodness, the market is over, consolidate a little more, even to the point where we meet right here with this upward sloping spider line and then continue to the upside. Because after a move where you have an asset, where you have Bitcoin specifically, from top to bottom, falling almost 40%, it does shake up the markets. You do need to rebuild that structure. And I've been saying that time and time again. I wouldn't be surprised if the remainder of December is quite boring, or at least it's quite boring for the next week or two. Is there a possibility of a Santa Claus rally? Possibly, right? But I just think at this point, you really don't want to have, a market where we just come down here and then instantly go back up. Although people would be rooting and cheering for that, that's not really a healthy move, right? The same way that we had this consolidation here, we had this consolidation to rebuild this area in here, right? We built this area. This is acting as the support. Would it be possible to come back down there again, finish out that support, solidify that support? Because remember, in my previous video where we talked about the potential low of the next bear cycle, we did talk about the $35,000 level, which would actually be literally in the center. Right here is 35,000. And that would make a lot of sense because that was where we had a lot of aggressive buying and consolidation and accumulation specifically for Bitcoin, right? Now, in the video that I put out where I said the must-see Bitcoin chart, a lot of people really like this video where we were talking about the Fibonacci levels. Now, somebody said to me, hey, have you ever thought about potentially adding changing the Fibonacci's to log scale since we're using a log chart? Would that change anything, right? So let's have a look. I've actually decided to do that. You can see this chart looks a little bit different. Now, some of the levels are acting a little bit funny. I do believe that the previous analysis that I did is the more accurate analysis, regardless of, whether you believe you should change it to log or not. Personally, that analysis to me has held. It's been holding for 12 years. Why fix it if it's not broken, right? But hey, just to entertain stuff, if we actually look right here and we do change the Fibonacci levels to log, we still see something actually quite positive for Bitcoin. What we actually see is that the 1.68 actually ends up becoming a bit of resistance, whereas then we come down and touch it at the bottom of the bear. We have a very similar thing right here where we have some resistance consolidation. The 1.618, although it did fall below it a little bit, where I would call this a giant bear trap if you ask me. We eventually did spring up to that level, and you can see right here, we are consolidating right here directly under the 1.68, exactly the same way that we did back here. We did have, so we hit the 1.68 back in April of 2013. We had a crash all the way down here. So basically Bitcoin was sitting at around $185. We came all the way down to about $30 and then we continued the move, right? So we did have that downwards move and that upwards. So if you look at what we're having right here, we have also had the downwards move and we are pushing on this again. So even if we did come down again and retest the 2.618, I still think we're going to break to the upside. And just to kind of go over what the price differences would be, we had talked about $190,000 Bitcoin, and if you talk about, where are we going to do the breakout from this time? We could do the breakout. From the 1.618 to the top. So that gives us about a 585%. We could do the same thing here. The resistance to the top, that gives us about 320%. So same thing, diminishing returns. I can't do the math in my head, but it looks very similar to the same math, considering that even if we're on log or not, percentages are still the same when you're talking about investments, when you're talking about money, right? Going from $100 to $10 is a 90% crash. Going from $1,000 to $100 is still a 90% crash. It doesn't change the percentage difference. So if we do still, go from that level, to the breakout to the upside, and we give that about a 150%, it still puts us pretty high. It puts us more around $160,000 Bitcoin top over here. And then it makes the low from that level. If we take 80%, that actually brings Bitcoin down to about 31,000. So 190,000 high, $35,000 low. If we do the standard, if we apply the log, then essentially we're looking at $160,000 high with about a $31,000 low. It's really not that much different. I just think the way that the standard scale works is much cleaner and it's a lot easier to analyze. So that is something that I just wanted to show you guys. Now, having a look at the fundamentals, first of all, total hash rate for Bitcoin, you can see right here above my head, is absolutely looking to put in a new all-time high. And while a lot of people still don't really look at hash rate as anything important, I consider it to be incredibly important because it shows miner confidence, as in the Bitcoin miners, and it also shows that the network is extremely secure, right? The more hash rate that we have, the more secure the network is, which arguably could be more attractive to investors, knowing that if they do choose to keep their funds not in a custodial wallet and keep it on the blockchain, we already know Bitcoin is essentially non-hackable. I mean, if you actually tried to 51% attack Bitcoin, it would literally cost you endless amounts of money, and I literally don't know how you'd be able to do it. I mean, where would all that money come from, right? So ultimately, that is good. But Here's the thing, and here's why I say I may have been wrong about Bitcoin. Now, I don't think I'm wrong about Bitcoin as far as being an amazing store of value. I don't think I'm wrong about Bitcoin as far as where we're going to see this cycle go. And I don't think I'm wrong about Bitcoin as far as saying that we are still structurally in an uptrend and we are looking to put in a higher high for Bitcoin over the next few months. But one area where we may have sort of overlooked things is the fact that the market has changed. Now, this is a historical snapshot, which, by the way, if you go to CoinMarketCap, you can actually go over to historical data and you could see snapshots of different prices at, different dates in time, right? Now, one thing is actually kind of funny just to see some of these top coins right here and how different the market has changed. But just to take an example, here's March 8th. This was right sort of, leading into the crash. We didn't have the big crash just yet, but you can see right here. So look at this. So Bitcoin 7-day falls 5%. We have Ethereum down 8%. We have XRP down 9%. We have Bitcoin Cash down 11%. We have Bitcoin SV down 13%. Yeah, there used to be a lot of Bitcoins in the top, right? And of course, Tether is up because people were hopping into stable coins because this was a crash. So what I'm trying to point out here is essentially anytime virtually in Bitcoin's history that Bitcoin used to get hit, we would see the altcoins getting hit much harder. And the farther down you went, the harder they got hit. Now, the reason this used to happen is because, believe it or not, before we had all these exchange pairs, there was a lot of trading from Bitcoin into altcoins. In fact, originally, there were only Bitcoin to altcoin pairs. Then we came out with stable coins, and as stable coins gained adoption, a lot of these pairs started to separate. They weren't as connected to Bitcoin, they would be connected to dollars. So the only reason that you really started to see dumps was because of investors panicking, but not because the Bitcoin to that particular altcoin pair was falling. Now, here's another example. This is February of 2018. Look at some of these top coins, guys. Look at how this has changed, right? Now, here's a really big crash. Look at this 7-day percentage that we had right here. So we had Bitcoin falling 29%. And look at these following altcoins, right? 32, 40, 32, 42. All right, this one only fell 22. That was Litecoin. So Litecoin held up relatively stable during that crash. But for the most part, 30%, 39%, 40, 41. You see what I'm saying right here? So what we were getting back in the day, essentially, was Bitcoin would fall and these other altcoins would fall harder. Now, let's have a look at what actually happened this time, and let's just take the biggest coins, right? So we have Bitcoin right here, and we know that from top to bottom, Bitcoin fell around 40%. Now, if we come over here and we have a look at Ethereum, from top to bottom, Ethereum only fell 26%. In the same time that Bitcoin fell 40%. Let's also have a look at where those are standing right now. So as of today, Bitcoin is still down 27% from its all-time high. Let's see where Ethereum is down. Ethereum is down currently only 9.5% from its all-time high. This is not normal. This is not what we normally see in crypto. Usually, Bitcoin, is sort of the tide that lifts all the boats, and if it goes up, everything goes up, and if it goes down, everything goes down, but we are not seeing that right now. In fact, even if you just have a look at the structure of Bitcoin, what's happening right now, this one doesn't show you as well, but you can see right here, we have this rough resistance, we have this resistance coming down here. I showed you guys all the resistance for Bitcoin. If I just go back to the original chart, there is a lot of overhead. We have this upward sloping resistance, okay? Let's look at Ethereum. What's Ethereum doing right now? Well, Ethereum right here, let me just get my tool. 1 second, guys. So Ethereum bounced right here off of support. It's also holding above the legacy support. It's also above this support right here. In fact, we're sitting above the high that we put in back here in May 12th of this year. This is almost a completely different chart than what Bitcoin has been showing us and is showing us. So this is telling me that the altcoins, Ethereum being the one that generally tends to lead the altcoins, are decoupling from Bitcoin. This is a different market. This is not the same market that we had seen all those years ago. And one of the things that I think about when I have a look at what's happening right now is the fact that not only are altcoins, and Ethereum specifically, who tends to lead the altcoins, decoupling from Bitcoin, but we can also see proof right here that Ethereum is starting to break above this red trend. And I told you, if we could get up around that 0.084, compared to Bitcoin, this is compared to Bitcoin, not in dollars, that we're definitely in a different market, guys. And what could be happening what could be happening is a lot of this big money, a lot of this institutional money that got into Bitcoin and rode it from 10K all the way up to almost 70K could now be turning and looking at Ethereum and saying, hey, so this is the second highest cap, probably has more of an opportunity for upside, has smart contracts, you can build on it, there's DeFi, there's gaming, there's NFTs, not to mention the fact that Bitcoin is proof of work, which I have nothing against proof of work. I think proof of work is great for Bitcoin. I wouldn't change a thing. But the fact that Ethereum is moving over to proof of stake now means that there's going to be more investors who are staking. They're going to be staking and holding up their funds. They're going to be putting them in liquidity pools. Not to mention the fact that we have EIP 1559. We also have a deflationary currency potentially for Ethereum. Whereas Bitcoin is still doing around a 3% annual inflation, Ethereum could end up negative simply because of the changes that are happening and will be coming to Ethereum. And you don't just have to take my word for it. In fact, you can see just recently, Three Arrows Capital Ltd. Bought more than $660 million worth of Ethereum since their billionaire founder and CEO Su announced he was quitting Ethereum. He complained that Ethereum culture suffers massively from the founder's dilemma. Essentially, everybody made too much money to care. And he says that, however, he would still bid hard on any panic dump. So is there a possibility that maybe we were wrong? I was wrong. Maybe the markets aren't going to repeat. Maybe this is an entirely different new, and just completely paradigm shift in the markets. Think about that. We're seeing Bitcoin have lengthening cycles. We're seeing altcoins not respond to Bitcoin dumping. In fact, we're seeing Ethereum looking quite healthy. This is a very, very healthy chart. Ethereum looks great, guys. And then you come over and you have a look at Bitcoin, and Bitcoin looks like it's struggling a little bit, right? So I think that times could be changing. Investors could be distributing. Maybe they're not selling out to US dollars. Maybe they're hopping into Ethereum. It's definitely a possibility, guys. It's definitely a possibility. So let me know what you think about that. I just like to bring this up. I like to talk about these things. It's always fun to play devil's advocate, but you can't deny. Have a look at this chart and have a look at this chart. I mean, even if I take everything away, we just get everything out of here, Ethereum's looking really good, guys. Ethereum's looking really good. So just my opinion on that. So speaking about other altcoins as well, we do have some big news for our Cardano holders out there. So Charles Hoskinson has revealed that the ERC20 converter testnet is now up and ready for the community to try. Using the AI service provider Singularity Net and its AJAX token, testnet users can make the most of a permissioned bridge to transfer these tokens between Ethereum and Cardano. Essentially, it's a bit of a mint and burn kind of thing. So IOHK, they said, we are currently building out and collaborating on multiple bridges to connect Cardano to other blockchains. And this first converter is a vital artery in the system. The more these connections grow, the higher the network effect to boost the flow of liquidity within the Cardano ecosystem. So yeah, I mean, this is pretty interesting, guys. So this is big for Cardano, I would say. It's nice to see Cardano finally delivering some things. We waited quite a long time. But so essentially what it would do is if you had an ERC20 token, you transfer it to the bridge, it would probably, I don't know if it would burn it or if it would just freeze it. And then it would mint a token on the Cardano blockchain, where then if you wanted to transfer back, I assume that token would either be frozen or possibly even burned. And then, minted or unlocked, unfrozen on the other blockchain. So I think it would be burned, though, if anything. That's how it works. But I haven't really looked into the technicals. Correct me if I'm wrong. But this is really good because I do believe as well that interoperability is necessary. There are way too many blockchains out there, and it's just too complicated for people to try to figure out how to hop to this blockchain. I got to get this token to hold into this wallet. I got to download this, add this extension. It's crazy, right? So I do believe interoperability will be very important. Also, guys, speaking about meme coins, so you may have heard about Floki Inu. Well, it sounds like they're aiming to launch a play-to-earn NFT gaming metaverse in February of 2022. They say that some of the projects that they'll have include Valhalla, Floki Place, and Inuversity. According to a report published by The Insiders, they were told by a Floki spokesperson that some of our utility products will launch this month, and our flagship play-to-earn NFT gaming metaverse will have its first version out in February of 22. And I mean, you can say what you want about the meme coins, guys. I'm not particularly a fan of meme coins. They're not my favorite. I don't choose to invest in them frequently, but I mean, we saw what Shiba did. Maybe Floki's next. Who knows, guys? Who knows? Also, just wanted to bring you guys a bit of an update today. So Nitro is something that is coming out very soon. They're actually going to be over on PokeStarter. They're going to be using Polygon. This is another play-to-earn game. This involves racing, and I'm bringing this to you guys because I like to bring it to you early. So obviously, the coin is not even out yet, and if you guys want to get in, if you want to check it out, definitely go check it out, obviously. So, play to earn. They have NFT upgrades where you can upgrade your vehicle. NFT owners can race on their own, or you can sponsor other players. Metaverse linked, new rewards mechanics, and also they are supporting the holders to create and join DAOs as well. You can have a look at this website, look at the arena. They have a preview of the game as well. But I'm really mainly just bringing this up to you guys because we have seen that there's been a lot of excitement around gaming, a lot of excitement around NFTs, the metaverse, and this just fits right in there as well. And I'm just letting you know because this is happening on December 13th. So if you are interested, you do have to hold 250 POLS, which I think around today's numbers are probably somewhere between $900 and $1,000. I don't know if that's too much, but has a very low raise of only 750,000 with a max allocation of 500. So I would anticipate that given this extremely low raise that they're doing, there would be a lot of opportunity for this crypto to grow. So it could just be an opportunity, not financial advice, guys, but check it out if you're interested. That's Nitro League. You can check that out over on PokeStarter. But I do want to end a little bit on regulation and what's really happening right now. So the reason that I'm not worried about what is happening is because all you're seeing is El Salvador using Bitcoin as their currency. You're seeing the US say Bitcoin is not a security. You're seeing them also try to become more friendly to the regulations, even going a little bit easier on some of the exchanges saying, hey, we really need to set a standard for these laws. And look what's happening now over in Australia. You have the federal treasurer, John, I think his name is Frydenberg, indicating that Australia would implement a comprehensive payment and crypto asset reform plan next year. The legislation is expected to enhance innovation and consumer uptake of digital technologies and place the state as one of the global currency leaders. The reform proposal, which is said to be the biggest in the last 25 years, assures it would enable Aussies to buy and sell Bitcoin and alternative coins in a regulated environment. For consumers, these changes will establish a regulatory framework, and the step would strengthen Australia's financial system and improve customer protection. So they're not looking to ban it. They're looking to regulate it. They're looking to embrace it, but they want to treat it the same way that other institutions would be treated. Now, obviously, with decentralized finance, that's going to be a little bit tricky, but also in the US, we have Commissioner Dawn Stump of the CFTC noting that regulators must issue clear guidance on how crypto rules will be enforced before punishing firms. She stated earlier that there has been a grossly inaccurate oversimplification offered for crypto assets, which suggests that it was either security regulated by the securities or commodities regulated by the CFTC. She says, what I discourage here at the CFTC is bringing enforcement actions without giving crypto firms the tools that they need to be compliant. She used, for example, the fact that crypto exchange Kraken was fined $1.25 million for failing to register as a futures broker, and added, I would have preferred that we would not have brought those types of cases until we had better defined how they might achieve compliance. So this is actually very good, guys. This is good that they're saying, hey, why are we coming down so hard on them? This isn't fair. We need to come up with a standard. We need to come up with a standard compliance for all of these exchanges, whether they be brokers or this or that. And we also need to come up with some clear definitions, right? So that, I think, is good news. I don't think that's bad news, in all complete honesty. And finally, news that I think everyone will agree is good is that payments giant Visa, Visa, MasterCard, we have Visa, is launching a crypto advisory service globally. In addition to allowing clients to use its network for digital offerings and helping manage back-end operations, services will also include educating institutions about cryptocurrency. Visa decided to offer these services due to the surging interest in cryptocurrencies and the world based on data from one of its latest surveys. So the demand is there, and it looks like they are going to bring those services that people want. So this is really good. Like I said, guys, I tried to get this video out earlier. I couldn't. So if it was a little all over the place, I had a crazy morning, but I was just thinking about this Bitcoin Ethereum thing happening right now, and how we really haven't seen stuff like this, and it really is a new paradigm. It is a new market, and it's exciting times. It really, really is exciting times, and I hope that you're all excited to be in the space with me as well. And I think on that note, we've gone long enough, so this is where we end the video for today. Thank you so much for coming back to the channel. You guys rock. Thank you for watching this slightly later video that I usually don't put out so late, but I do appreciate you watching anyway. And of course, most importantly, if you haven't watched these videos popping up right here, right now, check them out. Until next time, stay crypto, and of course, peace out.